My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. I'll be one to make friends. I'm just trying to make some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Today, it was all about momentum. That's why, even though we didn't have much in the way of news, the market could tackle on another magnificent move today after yesterday's gains. This time, Dow rising 212 points, S&P climbing 0.67%, NASDAQ falling 0.81%. These were all miraculous record close, by the way. So where did that momentum come from? Now, it is easy to come up with pat explanations for this Energizer Bunny action, but momentum is actually a tricky thing. I could tell you stocks are roaring because the standoff in Iran didn't turn into a full-scale war, or even World War III, as so many alarmists in the media predicted. I could tell you the market's on fire because employment's red hot. We know ADP, the nation's top payroll processor, released some incredibly strong employment numbers earlier this week. Then today, we got a terrific jobless claims figure. It makes you think that the Labor Department will give us a positive non-farm payroll report tomorrow. I can tell you people are buying stocks in anticipation of good feelings breaking out between the U.S. and China. Thanks to the Phase 1 trade deal, America, well, the Chinese seem willing to place large orders from American businesses, don't you think? I mean, especially in agriculture. I'm going to give you more on that later, including an idea that you want to know about, an idea worth buying. There's just one problem. I'm not buying that thesis. I'm not disputing that these bullish macro forces didn't help. I just think they're not the source of today's market momentum. Why? Well, because momentum is what happens when a stock keeps roaring for emotional reasons, not financial reasons. A stock that goes higher because buyers went in at any price, that, my friends, is momentum. Now, as much as I like it when stocks rally, I'm not a fan of momentum buying. In a healthy market, stocks go up or down because of a change in the underlying company. You get something that boosts the company's earnings forecast, and you can happily pay up for the stock. I mean, that's how you get a rally with staying power. That's my kind of rally. But eventually you get to a point where the momentum takes over, where people start buying stocks simply because they believe those stocks are headed higher. And that's where I think we're getting to, if not reaching there today. These momentum moves are typically led by the analysts. Stocks blow through the price targets, then they issue new higher targets in order to keep up. That's where we are. Given that the original price targets were usually set around the time of the last earnings report, they tend to be honest reflections of where the analyst believes something's headed. When a stock exceeds that level, then the sensible thing would be to say, okay, there's nothing new here, so it's time to declare victory and downgrade this thing from buy to
Don't buy.
And that's called a valuation downgrade. And we've had a few of them since the new year began because so many stocks have roared higher on little to no corporate news. But not every analyst is intellectually honest enough to give you a valuation downgrade when a stock bursts through the price target. In fact, lately we've seen a lot of analysts do the exact opposite. We have seen price targets being bump every time a stock exceeds the last target, where the analysts are basically playing catch up to the market. It's the analyst equivalent of buying a stock for no other reason other than you think it's headed higher. Some people call that the greater fool theory. Too many of these frivolous price target bumps and the market turns frothy. And that's what I don't want to see happen. We get froth, we get trouble. Let me give you a couple examples so you understand what I'm talking about. Consider the case of Apple. All right, here's a stock that's been outrunning virtually every analyst price targets. So you got to ask yourself, healthy rally or frivolous momentum? The answer? In this case, it's actually healthy. Apple's bursting through these price targets because in the last 2 days, we've gotten new data that cheers you. It indicates that the company's earnings could be much better than expected. The price target bumps don't reflect momentum. They reflect the fact that the earnings are possibly headed higher, maybe even much higher. Specifically, yesterday, we found out that Apple's retail and app stores are performing sharply better than expected. That means the earnings estimates need to go up. And a lot of it's those ancillary things, the other products that they sell at the retail stores. Then today, we learned that Apple's Chinese business is doing sharply better than expected. Now, that's a real shocker when you consider that the company pre-announced a hideous shortfall almost exactly a year ago because of a severe slowdown in China. And let's remember that in that last quarter, the Chinese and the United States were kind of at loggerheads. There were people talking about Apple being boycotted. When analysts boost the price targets for Apple and these kinds of stories, It's totally legitimate. So what's a frivolous momentum-based upgrade look like? Okay, we had several bank stock upgrades today, and I got to tell you, they reeked of it. I didn't like them. As I read them over and over again, I didn't see anything new. There were no changes. I mean, nothing. In fact, my biggest fear right now is that the banks may not be able to make the numbers, that there may be estimate cuts. Even though we own Goldman Sachs for my charitable trust, I'm astounded by the amount of love the market's showing it right now. Much of it seems momentum-driven. People like it. Why? Because it's going higher. I've seen the same thing happen in some of the other FANG names, particularly Facebook. That's particularly egregious because as much as I like the stock of Facebook, there's no real news. As the stock goes higher, these analysts are just bumping their price targets to stay ahead of the Facebook buying posse. The worst momentum call I've seen. Today's pathetic upgrade of the stock of Advanced Micro Devices, or AMD. Now, I know I've changed my rap going into 2020. That's the decade where I vow to be sweeter. This is the decade of Jimmy Chill, as I like to say on Twitter at Jim Cramer. But even Jimmy Chill has to draw the line on this Mizuho upgrade of AMD. This is a stock that's now run from the low 30s to 48 in the time since it last reported. Sure, AMD's executed on its new chips. Demand is strong. The CEO, Lisa Su, is phenomenal, and the competition from Intel remains subdued. But that's been true for a week. No, true for months. This upgrade is a late-to-the-party momentum call with little rigor to speak of. Then again, I know how tough this thing can be. In fact, the most rigorous piece of research today is one I disagree with. Came from a long-running bull on Cramer fave Tesla. Ben Kalo from Baird has liked Tesla all through the battles with the short sellers. He got to the promised land. He realized earlier than most, though, that Elon Musk has developed something new and special. When the stock was much lower, Kalo put a 355 price target on it. Now that Tesla's roared to the 460s, he's raised the price target to 525. However, he also downgraded the stock from buy to hold because he says the easy money has been made. That's rigorous. Now, me, I don't have to worry about price targets. I think the Tesla will stay strong for a long time. But I salute Kalo for honestly helping investors to navigate their way through this battleground situation. He loved Tesla lower. Doesn't love it as much higher. Doesn't that make sense? And he won't let the siren song of momentum lure him into staying as positive as he would have been at lower levels. But he certainly says, please don't short it. Here's the bottom line. After another terrific day, you want to stick with stocks that are running on genuine good news, and not just because of late-to-the-party momentum buyers. David in Florida. David!
Hey, Jim, as loyal shareholders for AMC, we're seeing new all-time lows daily. With 2019 box office receipts up, revenues down 4%, and now entering the streaming wars, we've had enough of the negative outlooks from the AMC leadership team. Short interest is over 55%, crushing any buyers that step up. What does the C-suite need to do to bring substantial change, or is it time for a new CEO or possibly an activist takeover?
Adam Aron's really good. I've known Adam Aron for decades. I mean, he's a good CEO. I just think that the business of movie screening is out of favor. I mean, look, my Chapel Trust owns Viacom, and that's also one of the worst stocks I've ever seen. So, I mean, we got to be careful here. We're throwing away some babies with the bathwater. I do think that Adam Aron can get this thing even. I do. I mean, it's at $6. I'm not recommending it, but Adam Aron is no fool. Let's go to Fran in Wisconsin. Fran,
the sugar daddy from Wisconsin.
there you go, man. Good luck this weekend.
It's a kind of a plus or a minus. I own Plug Power, Jim.
Oh, really?
Plug.
Yeah.
In the last 2-3 days, Jim, Plug Power has increased by almost $1 per share.
Right.
Question 1, do I buy more? Question 2, is Plug Power a possible takeover by Tesla?
I don't think it is. I mean, look, I understand they've got some hydrogen fuel cell solutions, but I've got to tell you, I'm going to be honest with you, Fran, this stock has been around forever peddling that same thing. I am not against it because I favor speculation. Unlike every other person on TV, I accept and think that speculative stocks can be a small part of your portfolio. But this one's done this to me and done this to people and broken their hearts before. Doris in Michigan. Doris!
Yes, hello.
Hey, what's up, man?
Mr. Cramer.
Yes.
Good, I watch your show all the time.
Oh, great.
I'm calling about Fiat Chrysler. They're considering a merger with Peugeot. Do you think Fiat Chrysler is a good stock
I don't
to buy
like
at
any
this time?
autos other than Tesla. Why own any auto when you can own the stock of Tesla? Karen in Kansas. Karen.
Hi, Jim.
Hey, Karen.
Thank you so much for taking my call.
My pleasure.
I would like to benefit from your accumulated investor wisdom about Texas Instruments.
Oh, it's such a good stock. Oh, it's going to have a good year. I can't believe the stock is still, it went down, it dipped, but it still yields 2.7. It's $130, and it is a buy. And if it comes down, oh, geez, what a gift. All right, even on a record-setting day, you need to stay focused, people. I want you to stick with stocks running on good news, not just late to the party momentum buyers where nothing is happening. Now, on Mad Money tonight, Tyson Foods has transformed itself from Chicken Little to Big Bird in this market. Could the move continue? I'm investigating. Then, this retailer stock took a bath when it reported. But you know what? I'm browsing the aisles to find out if it's time to take advantage of the savings and go shopping, maybe even pick up some coupons first. And there's a reason I don't fear a slowdown as much as I used to, and I'm going to reveal it. So I need you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.